What's up, guys? So this video is going to be on risk management, specifically talking about, how to actually, make more money in your winning trades than you would lose in your losing trades. I think that's very important as a trader because you need to understand how exactly to calculate your losses as well as your wins, so that if you have like a couple of losses back to back, that one win will overshadow most of your losses. Maybe like two or three of your losses. That's more or less what I focus on. Me being a trader, professional trader, I'm about, I would say, 87% accurate on all my trades, but I still am wrong a few times, right? That doesn't really take away from the fact that you are a trader. You only need to be 60% right to actually be a profitable trader. The interesting fact about that is that even if you have like losing trades, the only thing you really need to focus on is how to leverage your money out correctly to make your trades more profitable. So with me, more or less, I usually focus on like a 1-to-3 ratio per trade. That 1-to-3 ratio I have per trade gives me an ample opportunity to more or less get into markets at a really good standpoint. By standpoint, I mean, I'm in a position within the markets that if I lose this trade, like 2 trades in a row, I won't lose my money that I can afford to risk, right? Let's go to the euro against the US dollar really quickly. I have one position. I have actually 3 positions open. I have, this is a 1-to-2 ratio. This is a 1-to-2 ratio. This is a 1-to-3.2 ratio. So my best bet on this, out of these 3 trades, are going to be my U.S. dollar Swiss franc trade. So currently, if you look at the U.S. dollar against the Swiss franc on my 4-hour time frame, I'm basically speculating that I want the market to drop to a 38.2% Fibonacci retracement. And after that 38.2 Fibonacci retracement, I'm speculating the market to actually work off that support and go a little bit higher. Now, the best opportunity for me to actually show you guys would actually be, okay, my risk on this trade is 20 pips, literally 20 pips. And this is only because it's on a lower time frame. My estimated profit is about 65.5 pips, which is really good because this allows me to like leverage myself out there. If the market moves above that high, above that shooting star doji confirmation, then I have no reason to be in this trade for a short. I'm more or less looking for a long position. But seeing that the high of the trade is at right now on the 4-hour time frame, I'm not really looking to get long. I'm looking for that minor correction to get into the overall trend of the market. Now, when I get into the overall trend of the market, I'm looking to go long for maybe about, let's estimate this, if it pinned right off there, maybe like 150 pips, right? And my estimated risk on this trade would literally be, if it pinned off here and made a nice support, then my stop loss would be directly below maybe 50. So my risk on this trade, like if I put a long position in at 38.2, my risk goes below 50. My take profit is at, there. So it's really like a 1-to-4.6 ratio. And after that, I mean, it's kind of like, if the market moves beyond that point, then I have no reason to be in the market for a long position. But this really gives you like a good area, a good ability to look at the markets from a different perspective, because most traders in the markets really don't understand how to actually do risk management inside the forex market. Specifically, it's really important inside the forex market because you can make more money in the forex market than you can in stocks over a shorter period of time and a longer period of time. Also, if you stay consistent, that's how I've been able to accumulate such a large fortune inside the forex market, because it allows me to more or less like come at the market, analyze what's going on within like a few different instances, like say a few different circumstances. Say, okay, if the market is on like a severe uptrend and I have a possibility to get in a correction at an extinction, something you guys learned about already in the course. I'm hoping you're watching this video while you're going through the course, so you can have more of like that thought in the back of your head that says, okay, so I'm looking for a 1-to-3 ratio per trade. And my 1-to-3 ratio is going to give me the ability to actually, be inside the market for longer periods of time with a minimal risk. Okay, that's what everybody wants. If you can stay inside the market for a minimal risk for longer periods of time, you're already ahead of the game of most traders. And the fact is that most traders don't understand how to actually swing into trades or hold trades for longer periods of time. I mean, just now you saw me on a 1-hour time frame. I'm zoomed in on my trades, and now on a 4-hour time frame, looking at it from a bigger perspective. So I'm more or less estimating I'm going to hold these trades for maybe like 3 or 4 days. Okay, let's go to another trade I'm looking at, which is the Australian dollar against the U.S. dollar on the hourly time frame, and let's zoom that that in. Go to the 4-hour time frame. Okay, my estimated what I'm basically estimating is that, okay, this is Sunday. We had a nice gap and a nice piercing line right here. So I know after a piercing line candlestick formation, what happens is that you have the correction, you have the reversal. I'm only expecting to take 38.2% of this actual trade, but see what I'm also understanding, there's a support over here at this low. So I don't really want to get into the vicinity of estimating it'll hit 38.2 when I know it has a higher probability to bounce off that resistance. That previous support now estimated as resistance. So I'm more or less just going to take a few pips and get out of this trade. I mean, by a few, I don't mean like 10, 20 pips. I'm talking about maybe like 38 and a half. I'm actually stopping. See, I'm trailing my stops right now, so I'm actually more or less like I was feeling a 10 pip risk to a 38 pip profit. This is a really kind of like a short-term trade. I'm not really expecting to hold this over a longer period of time, but this is Australian dollar against the US dollar, so I'm not really estimating to get like a couple hundred pips out of this like I would like pound against the Australian dollar, euro against the Australian dollar. Let's move on to the euro against the US dollar. Actually, about right here. Euro against the US dollar right now. Pretty much the same circumstance. I'm only estimated to take like 36 pips off this trade. I'm only risking 18.2, so this is a 1-to-2 ratio also. And the ratios inside this circumstance is more or less about, I want to, if I lose 2 trades in a row, okay, and I win 1 out of 3 trades, right? I win 1 out of 3 trades. My estimated profit is 15%, and I've lost 5% on previous 2 trades. So I make 15%. I'm still 5% profit. You see what I'm saying? That ratio has proven over time to me to be one of the best ratios because you're not always going to have consistent losses, but also you're not always going to have consistent wins. If you can learn the discipline and the patience needed to be a forex trader, what's going to happen is that you're going to open a whole new world of possibilities up for yourself as far as like discipline, your mental process, your thinking. It allows you to be more coherent and more understanding about what's going on inside the market at any specific time, especially when you're monitoring your trades. Okay, so I hope this video was really helpful to you guys. I'm probably gonna end up doing more videos like this to really give you an overall understanding of how the market is supposed to work. But I really enjoy you guys asking me questions like this because it gives me a chance to give you my insight on how I think markets work, how my experience comes in handy, and how my discipline is. Also, my risk management, which is really key to any market. Okay, so I'll see you guys in the next video. Hope you have fun. Hope you took some out of this video.